Well, hey there, everyone, and welcome to the VIP Trade Room with Roger Scott and Matt Horton. Now, today is Wednesday, October 22nd, and my name is Raleigh White, and I'm coming to you live from yet another beautiful day here in Austin, Texas. Now, I'm going to be your moderator today, and in today's session, Roger's going to be covering a range of important topics, including his earnings scorecard and what to expect this quarter. He's also going to talk about taking options and debit spreads on top stocks. He's going to also share, and this is important, how implied volatility impacts stock selection. A lot of questions around implied volatility, what it means, and how to use it. And Roger wants to cover this again for everybody. He's also going to share the difference between day and swing trading using daily charts. And as a fun thing, he's going to share why Cathie Wood's fund can't mirror the Russell 2000. He has some definite thoughts about that and wants to share those. And then lastly, we have a special guest with us today, Kane Shea, on how he likes to find or how he does find future stock projections. Now, if you've got any questions during today's presentation, please type them in the chat window and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. Also, folks, please note that the chat is open to everyone, but we do have some ground rules. Always be kind and supportive in your posts. Number two, keep to the topic. No political discussions allowed whatsoever. And please, please, please keep your side conversations to a bare minimum so that the rest of us can focus on the education and information that Roger is sharing. Because after all, let's think about it, folks. He's spending time with us to help us get an edge in the markets and to become more confident and consistent in our own trading activities. Now, for those of you that were with us this morning at 8 a.m. Eastern Time for Roger's pre-market show, and I certainly hope that was most, if not all of you, we know that there were several key catalysts today that we needed to keep our eyes on. On the financial sector, we knew that Capital One had earnings coming out before market open. On the healthcare side, we saw that Intuitive Surgical was up a whopping 16%. In consumer staples, Mattel was down 5% coming into the open. Chip stocks, Texas Instrument down 5%. And then looking at Infotech, Netflix, AT&T, and GE earnings were all scheduled to come out before market open. So on the Infotech side, and we did during the session have Netflix came out, they came out much lower, but didn't seem to have much of an impact. But Infotech is a sector worth looking at. And then on the Fed side, we have a Fed speaker today. We also have a 20-year bond auction this afternoon, and we had crude oil inventories being released. So these were the key catalysts to pay attention to. And for those of you that may not familiar with what we mean by catalyst, a catalyst is information, important information that is either known or will be known during the trading day, today's trading day, but is not yet priced into the market. So the things that we need to be aware of, and that's our definition of a catalyst. Now, when it comes to small caps, and you know Roger likes to give of these towards the tail end of his pre-market show, there were four tickers that he shared with us: SHMD, BDSX, BNBX, and DNUT. Now, the important thing about these small caps is that Roger's selection is not only based on price action, but most importantly on extreme volume in pre-market. And when I say extreme, he's talking about volume that may be 100 times more than what the normal volume for the small cap stock is. He also likes to remind us is that small caps are not market dependent. They're not, driven by the same things or influenced by the same things that large cap stocks are, like the catalyst that we just shared with you. And the reason that is because institutions aren't putting money into small caps. It's retail investors like you and me. He also recommends that if you look at trading any of these small cap stocks, only do it during more normal market hours. And if by 2 p.m. Eastern time, an entry that you're considering hasn't been triggered, just take the trade off and look at trades for the next day. And if you ever do get into any one of these small cap trades, Never hold them overnight. You're just asking for trouble if you go ahead and do that. So let's go ahead and let me share my other screen here for a minute and let's see how today's small cap stocks have done. Okay, folks, you're looking at 6 panels here, and the ones who I want you to focus on are these 4 right here. We had 4 tickers. So SHMD, okay, the pre-market high was $7.53. We can see it opened here and has just been drifting sideways. So nothing at all here interesting at all. In BNBX, the pre-market high was $8.49. We opened here. We're just moving sideways. Doesn't look like there's going to be any action there whatsoever. BDSX, we look at this one here. The pre-market high was $9.61. Like the other stocks, it just opened, moved sideways, drifting lower, nothing there whatsoever. And the same with DNUT. The pre-market high was $5.54, not even coming close to sniffing at that and actually selling off. So the 4 small caps that we were looking at today didn't do anything. And for this week, we've identified 15 small cap stocks. 2 of them actually did hit their entry levels here, and both of those were profitable. So that's a hit rate of 13%. Okay, 2 out of 15 is 13%, and we're gonna keep those stats for you and share them with you. The other 2 panels over here, this happens to be the SPY. We can see what the SPY has been doing since the market is opened, and TLT, this is bonds right here. By the way, these are 15-minute charts that I'm looking at. This is Thinkorswim. I do not like the black background at all, so I shift it to white, which is why it might look a bit different. So I'm in simulated trading mode because I'm just doing some practice trades on small cap stocks if anything does hit. But this is what we're seeing so far today. So let me go back to the normal presentation. Roger also shared with us what was on his large cap stock list, and he starts with shorts. And on the short side, we can see there were 8 stocks that he shared with us: COP, TULI, MOS, EOG, CALM, VTS, and KNF. On the long side, there were what, 3, 6, there were 9 stocks there. And you'll notice that TER and GRMN, both of them have asterisks. That means that those were looking as potential A-line setups. And for those of you that have been with us the past couple of days, you know a lot about what A-line stocks are, you know, how they're generated and how to trade them. So that will mean something to you. If you don't know anything about what an A-line stock is, I recommend that you go back and re-review yesterday and the day before's VIP trade room, and you'll understand a lot more about that. But that's why those are asterisked. Then we also see TPR, VRTX, etc. You can read the stocks that are there. And Roger gave those out this morning. He also, you know, obviously he brings up the chart, shows you what's going on, gives you a couple of key words as to what to look out for. And he always caveats this by saying, look, folks, if you decide to take action on any of the stocks on his watch list, just make sure that you're getting the right confirming signal before you consider entering those trades. And Roger shares with you every day what a confirming signal is, how he selects the stock, so you should all know that. Now, lastly here, let's take a look at the pre-market comments, okay? The markets were flat and very docile coming into the open. You know, much like yesterday, pretty darn boring. We did note that the bonds were moving lower and the VIX had also moved lower below the 19 level. But we did look and see the SPY, the QQ, and the MAGs, they were as flat as pancakes. And I'm talking about when you looked at the daily chart, not the intraday, but the daily chart. I mean, those candles were extremely flat. And he also noted that sector rotation once again was swinging back and appeared to be favoring more speculative stocks. Now, this sector rotation has altered every day. I mean, on Monday it was favoring speculative stocks, yesterday defensive, today speculative. But the key thing is this, that there really didn't appear to be any momentum or directional bias in the markets whatsoever. And his advice to all of us was be careful, folks. All right. The markets are waiting for Mag 7 earnings. We've got Tesla coming out, we have IBM and others, but it just seemed to be, once again, just, the markets appeared to be asleep. I'll just put it that way. So, we got a great group here. We've got a wonderful set of gurus that are with us today. In today's agenda, folks, earnings scorecard and what to expect this quarter. Roger's going to share with us options and debit spreads on top stocks. He's going to share us and tell us why implied volatility is important and how it impacts stock selection. Probably the most often asked question Roger gets in his mailbag is more information about really tell me, explain to me implied volatility and why I should even care about it. The other things that you're looking at, the difference between day and swing trading using daily charts. This will be fun, okay? He's also going to tell us why the Kathy Wood Fund can't mirror the Russell 2000. He's got some strong views on that, and he's going to share that. And then lastly, folks, we're so pleased to have Kane Shea with us here, and he's going to share with us how he finds opportunities based on future stock projection. So once again, we have a great day here. We've got a super group of people here. Let's say hi to everyone. We've got Matt, we've got Kane, we've got Roger. We got the full complement here, folks. Gentlemen, how are you doing?
Doing great. How are you doing today?
I'm doing super, Roger. I loved your commentary this morning. The word moribund came to mind, and then I was thinking about your comment the other day when people use words like that. Why don't you just use a normal word that people understand? But basically, sleepy. I love the two daily charts that you showed, the daily candles flat as a pancake. It's just kind of
Yeah.
like, how can that be? And here we are in earnings season. We would
Yeah.
expect something more, but nothing. Anything changed this morning?
Um,
Since our discussions?
Not really. No, no. The only thing that I found interesting was I thought it was kind of interesting how overnight markets did not express the downside in tech till after we opened. That's not very common. That's actually uncharacteristic. It actually puts us at an advantage because that means the market was not appraising what we had beforehand, and that doesn't happen very often. I would have expected the market to be the pre-open to be where we are right now. But we did not see that. So I thought that was kind of interesting. I really
Hmm.
thought that was kind of interesting. And I'm also finding it interesting that if you're looking at mega caps, if you're looking at mags are actually only down. Tech, if you look at XLK, it's down 1%. But if you look at mags are only down 0.64. And there's a few stocks in mags like Google, like Microsoft, that are actually doing really, really good right now. So I'm not a bear right now. I'm not a bear. Not a lot, a few folks. I think one or two folks asked me, "Hey, how come you haven't been shorting a lot lately?" Shorting has been very, very difficult. The downside momentum. Hey, Kane, by the way, how are you? I'm just seeing. My
I'm
chat
doing
was a
great.
little closed. How are you today?
Oh
How are
yeah,
you?
great, great.
The
Thanks.
so yeah, it's been very difficult to short. I love shorting. I love shorting more than I love going long because everything happens faster, much, much faster. So shorts are great. The problem is the market is just not there. If I see the SPY breaking down below the major averages, I'm going to start shorting, but we haven't seen that yet.
Right.
And I'm just going to share my screen real quick, and I'll show you another thing, just real quick. This is kind of important. Here, let me just here, right here, perfect. Where's my TC? I had this right here, stock fetcher. How come it's not opening for me? All right, I'll just open up another one here. Oh, why? What is going on here? Sorry about that, folks. It just takes a second for this thing to get working. One
There
second.
you go. There we go, Roger. We're
Oh, it's
seeing it
right here in
now.
front of my face, and I'm looking
Yep.
for it to open. Okay, well, there we go. Just wanted to show you guys something. I want to take this back to this morning. Actually, this right here is this morning. And you could see the number of stocks making 52-week lows is only 9.
Right.
The number of stocks making 6-month lows is only 11. And this is right now in the current market. The number of stocks making 50-day lows is 17. Um, Hey, Matt, put SE on your watch list for a gap to green to the downside. Actually, that looks great. Um, Number of stocks making 90-day highs is 27. We have no momentum right now. No momentum. Well, Roger, why is the market going down? Because of a few large cap earnings. But overall, the market, look, 90-day high, 57.27. We're in a very, very, we're not really what you're seeing in the market is not a reality. It's more of a market cap distortion because of earnings right now, at least for now. That may change. But I had a difficult time finding long stocks and I had a difficult time finding short stocks, if you want to be truthful with you, and I always am. So I'm not really seeing and I've also been trading less in the pit and doing non-directional trades, and they've been working out great, but we took a win on MO. We took a win on BSX in the last 12 hours. But overall, things have not been really moving a lot. We haven't been getting a lot of ground, and I think most of you saw this little. I don't know if you guys saw this or not, but I posted this a little while ago. I posted this in my uh, pit channel. Can you guys see what Harry's doing here?
That's awesome.
Can you see what he's doing here?
He's got some baskets.
Yes, yes. And notice where he is?
He's underwater. Yeah.
Yes. And what do we do underwater with baskets?
We pick up shells.
Underwater basket weaving.
Weaving. Oh,
Underwater basket weaving.
I
That's
should
what
have known.
Harry's
That
doing.
was my major. That was my major in
You
college.
see? You see? So yeah, you could see it right there. You could see it all right there. Let me just delete. I'm just trying to delete a couple of things from here to free up some disk space. But you guys could hear me and see me. So there's just not a lot of momentum. Now, before we get into today's topic, I wanted to talk to you about something important. And this is today's. I always have an agenda when I come here, but some things sometimes between the time I get my agenda and something happens that's just like a perfect example for you. Okay. A really, really good example for you. So I want to show you something. And I want to show you how difficult this would be mentally to get through. Okay. For most people. Am I sharing my screen?
Yes, you are. We see your
Okay.
stock fetcher screen.
Thank you, sir. Thank you. So I want to show you guys something. So this morning, this is the Trading Zone Live. I'm not trying to sell you anything. I'm not trying to get you to join Trading Zone. I'm not doing any of those things. I want to show you something that's really important. Mind traps. Can you close the? Yeah. I want to show you guys something. So this is this morning. This is this morning, okay? Matt went long at 671.48, right? You guys could see it all right here.
Mm-hmm.
Telling people where the stops is, and he gets stopped out. He gets stopped out. We take a loss of about 70 cents here, 68 cents to be specific with you, okay? So a lot of people would get a little nervous right there. They would be like, oh, it's a bad day to trade. I got whipped. I'm not going to do it, okay? A lot of people would stop there, at least, especially people who are a little traumatized. And I know a lot of people here who are traumatized. I'm going to say about 70, 80% of you. So then what does Matt like to do? He goes long again. He goes long at 671.07. He gets stopped out at 670.50. That's two. He gets into two trades, and before 10:30 in the morning, he's already stopped twice. Now, be honest with me. What percentage of you guys would still take trades that day from him? Not 100%. What percentage? Mental toughness, right? And I'm not trying to make fun of anybody here. See, look what Tim says. If you took all of them, that's great. That's what you should do. And hindsight is 2020. But how many would have the balls to continue taking the trades? Okay, right? Of course you did, Michael, because it was too tough on you psychologically. It's tough psychologically on a lot of people. See, look at Chris. I lost confidence. And I'm thank you for being honest. Thank you for being honest. I was hoping you would say that, right? You stopped trading, you lost confidence, you don't day trade spot anymore. I've thought about doing the opposite of him. Of course you did. Of course you did. Sure you did. But then let's see what happens afterwards. He went short at 670.38 and he took a profit at 667.68. He erased a lot of sins right there. So basically everything you lost multiplied by 3 and you made it back in one trade. Now, the problem is, what percentage of people had the balls to take this trade? Not a lot. Not a lot. Not a lot. But then we weren't done yet. We went long, and we went long at 668, and we got out at 669.11. Really good day today. Really good day today.
Mm-hmm.
So who was it that said, I'm thinking of taking the opposite of trades? Don't quit your day job just yet, Janet. Stick with what Matt's doing. Don't fade him. Well, if you fade him, you'll be in bankruptcy court pretty soon. So Matt did really good today. Really good today. But as people pointed out here, people, and I appreciate you guys being honest with me. I was hoping you were going to say, I chickened out. I lost confidence. I thought about fading him. That's what I was hoping you would say. But the bottom line is the bottom line. Now, what it's not easy. It's not easy. It's not easy. And the problem is when you're doing this in real time, your brain chemicals are firing off. They're firing off and they're giving you missed signals and they're telling you all these confusing things and you can't listen to any of them. I'm going to show you guys something. And I drew this before and I'm going to show you guys something. You see this right here? There's a line going to the left and there's a line going to the right and there's a straight vertical line in the middle. You need to, at every trade, you need to be right here. Most of you were right here on that trade. You were thinking about what happened and instead, or what could happen, but you weren't thinking in the now. In order to become a professional trader, and I know a lot of you want to know what the secret to success is. The secret to your success is being able to take that third and fourth trade that Matt gave you. If you took those trades, and I don't think a lot of people did, congratulations. You're making huge strides in your trading. Huge strides in your trading. Huge strides in your trading. I don't say that very often. Huge strides in your trading. If you did not take these trades, try to learn from this experience. Yes, Jason, reading Mind Traps every day would definitely help. So the lesson here is we're not trading individual trades. We're trading a program. Understand? If you want to go back to the last trade, go back to the last 100 trades. And again, my point here is this apply. Now, the reason I wanted to show you this is because it's much easier if you lose money overnight on a trade. And I'm talking about something very uncomfortable right now. And I want to stay on this topic because this is what's going to make a difference in your trading. This uncomfortable feeling, the cold hands, clammy hands, that's where you make your money. You need to start being able to take that third and fourth trade. If you want me to tell you a difference between a professional trader and an amateur trader, I'm going to look at the person's behavior after he has 3 or 4 losers. That's when the real him comes out or her comes out. Do you guys understand? Now, if you guys have overcome that, congratulate yourself. You're making really, really good strides in your trading. And today's example really exemplifies that. If you did not take the last 2 trades, then you've got some work to do. And also, it's much easier when you're swinging it because it's easier to recover from your loss after 24 hours or after 2 days. That's why I take it slow on you guys in the pit. I actually want you guys to follow all the trades. Okay? Bob says not yet, but working on it. That's an honest man. Now, what I was hoping that at least 200 people here would say, Roger, that's the best thing you've ever taught us. Because if you think yesterday's session was great, what I'm teaching you now is the reason you lose money. Do you understand? I'm pointing it out. I'm rubbing your head into it so you understand psychologically what is going on. Yes, I know you need to hear this. And if you don't think you need to hear this, then you really need to hear this. Now, Kane, is there anything that I've said just now that you would take back or you would not say? And please be as blunt as possible with me.
No, I would 100% agree. And the way so that the one of the most important things I think that you said was that you need this momentum, right? And we tend to get, if we lose a few trades, you lose your momentum, you lose your confidence, you feel bad about yourself. And so you've got to redefine what a successful trade is. And so you learn to not define the result of the trade, meaning did I win or lose, as a success or a failure. The success comes in, did I follow my plan? Did I follow my stop? Did I follow my target? Did I exit when I was supposed to? Did I enter when I was supposed to? And even if you lose the trade, but you followed exactly what you did to stop, just like Matt did, then you've won. That's a win under your belt. Mm-hmm. And so you should have had 4 wins right there and not 2 losses and 2 wins.
Exactly. And I would agree, Roger. I can only just say from my background, exactly right. If you follow your plan and can grade your entry A+, it doesn't matter what the result is. It doesn't. And
No.
guys, and Matt's providing an alert service. Matt is not just capriciously doing things. He's following a very specific process, looking at internals and things of that nature. And so I'm not surprised at all. Matt, congrats, buddy. I mean, you just stuck to the plan.
Yeah, that's the key. Sticking to your plan, not deviating from your plan. A+ setups all the way. That's the key. That's all you can do. That's all I can do. That's all anybody can do. The key is to consistently give you A+ setups. But I wanted to use this example today because 50% of traders would lose their confidence, 25% of traders would just stop for the day, and about 10 to 20% of you, Richard says, I would be listening to this look what Richard just wrote. Look what that's a guy that you see, he posts his statements. I mean, I would be listening to this, everyone. I was there no more than a year and a half ago. This is really important. And if you're sitting, no, this is not that important. I want to learn the latest, your entry technique. No, folks, this is where the money is. Mm-hmm. This is where the money is. This is that 60% between your years. That's what we're talking about right now. And I wanted to bring it up today because we didn't start with 2 winners and ended up with, we had 2 medium-sized losers and then 2 beautiful winners. And most of you, I want you to learn from this. You're not trading individual trades. If you send me an email and says, I'm really disappointed in you, I lost the last 2 trades, then I'm going to write back, I'm really disappointed in you because you're not doing what you're supposed to be doing. You're not following the plan. Or you're trading too large. Please, 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 whatever you think you're going to learn or whatever you think is important to your knowledge, there is nothing more important than what we're talking about right now. There is nothing more important in your trading than what we are talking about right now. There isn't. There is 0%. This is the 99.919999999%. Okay? Okay. All right. Sorry about that, but I needed to get that off my chest because there was a really important learning moment here. And I hope you guys took this opportunity and are like, Roger, thank you for that, because that's where the money is. That's where the money is.
Yep.
That's where the money is. Okay. So I wanted to sorry, I didn't mean to get all serious on you. I that's not what the point was. I just wanted you guys to understand what I was looking at. And now for the next segment, which will only take about 5 minutes, what I want you guys to do is take out a piece of paper and a pen and write down what I'm going to be talking about. I'm going to be giving you some takeaways right now for earnings. This is very important as well. Because, okay, let me try it like this. A lot of you guys like Tesla, okay? what makes Tesla up into I don't even know what Tesla costs now, $400, $500, $600 stock. I don't look at prices very much. It's not what Tesla's doing right now. It's the carrot, that future carrot, the future carrot. The bigger the carrot, the more future expectations. We've talked about this before. So it's very important to know what to expect during earnings season, because what happens is there's a certain expectation. The carrot, believe it or not, I believe, don't quote me, but I think it's 7.2%. We're looking at 7.2%, which is that's what was baked in. Frank says, I've been trading for 27 years and love what you're saying. And Frank, you know damn well what I just said is the most important thing. 100 times more important than reading 100 trading books. Thank you, 434. Thank you. So let me just kind of give you this update. I'm going to be reading this, but I want you guys to write some of this down, okay? So we're now getting into the heart of third quarter earnings season. We got more than 300 companies reporting this week, including about 85 S&P 500 companies. By the end of this week, we're going to have close to 30% of the mix, okay? 30% of the mix. With third quarter results for more than 11% of the members already out, we're getting some idea. I mean, it's a rough idea. It would be much better after this week for obvious reasons, but we're in a good place right now. So first, the proportion of companies beating EPS, and again, take this with a grain of salt, but I wouldn't be doing my job if I didn't get into this. And is 58 for the 58 members is pretty good. We're beating EPS and revenue estimates for the stocks that have reported so far. The revision trends continue to be positive, and we're looking pretty good. The aggregate third quarter earnings are on track to reach new all-time quarterly records, which is one of the reasons why I believe the stock market is looking so good right now. And yet I'm talking about overall, not this particular second. So the aggregate total net income for the indexes is going to come in. They're shooting for, you may want get this number, Kane. You're going to love this number, 592.5 billion.
Wow.
Which is an all-time high, folks. That's
Yep.
an all-time 592.5 billion, all-time quarterly record. Now, we already know what the key earnings reports are going to be this week. It's going to be the Magnificent Seven, including Netflix and Tesla, and we've got more on the way. So far, including all the numbers so far that we've reported, including ones up till yesterday, we actually have about 70 now, because this is from Monday. We have about 12, 13% out. The total earnings for the companies are up 15.4%. They're expecting 7.2%. It's very early, but so far the numbers are are about twice as good as what we're expecting, which is really good, right? And 86.2% beat EPS estimates, and 79 have beaten revenue estimates. So we're moving in the right direction, folks. We're moving in the right direction. For the financial sector, Raleigh, we have 50% of the companies, and total earnings, revenues, EPS is up 20.4%.
Holy smoke.
The average, we're supposed to only go up 7.2% cumulatively this year. This is a really good number. And I mean, 50% is 50%. We're not talking about 10%. Folks, I hope this is interesting to you. This is important because institutions gauge what they're going to do based on these numbers.
Right.
And I don't get into numbers very often, but when in Rome. Now, what about the big picture? The big picture, let me give you the big picture here. Hold on. So the big picture is looking very good right now. We are not having any kind of an issue right now. We're looking better than expected. And financial companies, 88% have beaten. So 96.2 have beaten EPS and 88.5 have beaten revenue. That's really good. Thank you, Jason. That's really, really good. Really, really, really good. So, so far, they're, according to Zacks, which is where I'm getting this information from, Their EPS estimate is only 6.4% higher, not 7.2. So by any stretch of imagination, by Zacks or this, we're looking really, really good so far. So folks, there's nothing. There's nothing. Don't get political on me. Don't. We're looking great. The companies are doing really good. Hopefully, we can stay that way. What I don't like is the momentum, but I do like how things are looking. So that's the first thing I wanted to do. I wanted to give you an earnings update, which I think is pretty good. Second, don't tell the media. Don't tell the media. Oh yeah. I wanted to talk about. I want to talk a little bit about Kathy Woods. Okay, there's a lesson here. And folks, there's a lesson here for all of you. Okay, and I'm going to teach you this lesson right now, and I'm going to only take about 10 minutes for this. There's a very important lesson here for each and every one of you. Okay, so for anybody that doesn't know who Kathy Woods is, she's a small cap. She runs a fund called the Innovation Fund. And basically, the premise of the fund is to find new technology that's going crazy. And most folks compare her index. They compare her index with the Russell 2000. Okay, and you could see Russell 2000 is right here. Now, for the last, I'm going to go to monthly, and I'm going to go back 5 years. So you guys probably don't remember, but I drew this for you back in 22, and I haven't changed these lines and I said we need to break out, and we did. So you could see that the Russell 2000 is at an all-time high, right? Now, it took a long time to get there. Took a long time to get here. This was the COVID, and I said price has to come back to fair value, which is right here, and it did, and then it came back, and now we're at an all-time high. Well, Kathy's been telling everybody, all her investors, that when the Russell comes back up, she's going to go, Kathy Woods, that her index is going to be making an all-time high and even outperform the small caps. Well, let me show you something. Does she look like she's has she made an all-time high again? Not even close. So, Roger, what happened? What can we learn from this? Well, I'll tell you what we can learn from this. When Kathy was, and this is something you need to learn, next time you see a hedge fund that's magically outperforming everybody else, what you need to do is look at their drawdowns. So what I did when Kathy was making all-time highs, I had a suspicion she was pulling a rabbit out of her ass. But instead, what she was doing was this. I'm going to tell you what she was doing. She was taking stocks that were extremely correlated to each other, and she was adding them on top of each other. So what was going on, and the market was doing this, right? And she looked like a rock star because she basically had 3 tech stocks. What she was actually doing, and I'm going to tell you exactly what she was doing, she was disguising to her clients, but what she was really doing was running a triple leveraged NASDAQ fund. That's what she was really doing with crappy stocks. So when I saw that, and I saw that by looking at her upside versus her drawdown, and if you guys have been here for years, then you remember me talking about this many. Do you remember that, Dale? Dale says you and Jeff Z were all over ARK at the peak. And Dale, were we not saying exactly the same thing? That the reason Cyrus was there. That's right. A lot of you guys were there. So I was saying was when things take a fall, Kathy's going to be in the deep doo-doo because this will work itself down. And boy, oh boy, did it. And I drew this for you guys in real time right here on the Russell and her right here. This was the discussion that we were having 3 years ago. This was a 3-year-old discussion right here. I never changed this. Lewis remembers. Okay. So, and I said, we got to watch this level carefully. So, because folks were asking me, how low do you think she'll go? I said, the problem's not going to be going low. The problem is going to be getting back up. So what happens is this, folks. This is where you need to pay attention. Every time you have a bull market, you have a certain all stocks will go up in a bull market, no matter how good or bad they are. And then a bear market will come, and the bear market will wash out all the crap. And we start up another bull market. And basically, what she's in right now, she's in a bunch of stocks that had a P ratio of 200 when the market was up here, and she's still in those stocks. And investors are like, and what she was telling investors this whole time was just wait till the small caps rally again. Just wait till the small caps rally again. Well, Kathy, my friend, the small caps are at an all-time high. 98% of small caps funds follow IWM. And so take a look at this. This is a 5-year discussion. So you could say, if you want to, that I predicted the futures 5 years in advance. Here's Kathy, and here's the Russell 2000. Here's Kathy, same chart, and here's the Russell 2000. It's going to be, Glenn, you were there too, by the way. Lewis remembers me saying, folks, everything I'm telling you right now, I told you 5 years ago. But now I could finally prove it, because finally the Russell's making an all-time high. And where's Kathy? She is going, my friends, to go out of business really, really soon. And she's going to get a lot of lawsuits, because now people are like, well, Kathy, where's the beef? Don't most funds follow the market? Yeah, 98%. What's happening with yours? So, folks, don't fall for the banana in the tailpipe, and listen to Uncle Roger when he tells you something. Roger, your analysis is why I never traded ARK. You remember that, Lewis. And if you think I'm saying something new or different, I'm not. I was telling this to Kane when he was a student of mine. Okay?
That's right. Yep.
All right. So just wanted to, so folks, pay attention to things like that. They're very, very nuanced, but you could really tell. The summary is, if you see someone strong, the summary is this. The point is this: if you see someone really doing something crazy in the market, look at their drawdowns. And if their drawdowns are as big as their upside moves, then what they're doing is they're tricking you with leverage. She was tricking everybody with leverage and making it sound like she was a good trader. And folks who did not have the level of understanding of like me or Kane or Raleigh, they were like, oh man, this is amazing. I'm putting all my money into this. And I was like, oh my God, folks, do not touch this. Do not touch this with your. So always always compare the upside to the drawdown. Remember my formula MAR ratio? Mm-hmm. Nothing changed. That's the point here, that you could see this by looking at the drawdowns. So my point is, be very, very careful when you see somebody grossly outperforming the market, and make a distinction of, are they outperforming the market with their talent, or are they outperforming the market with raw leverage? It's very easy to outperform the market 3 times if you're 3 times leveraged, which she is and was. Okay? So I'll talk about the MAR ratio another day. I want to jump into other topics. So now let me give you stocks. I promised to give you stocks that I'm looking at right now.
Hey, Roger, options. just a quick little side comment.
Yes.
Looking at the markets, and maybe Matt's tuned into this because he's listening to a stream, but man, I'm just looking at the futures markets. The ES and the YM nosedive, bam, bounced back, and now gold has bounced back. It's almost like, I don't know what happened, but it dropped, I don't know, 30 points.
I think Trump may be speaking.
It was a comment out by the White House that said they're considering some kind of export restriction on China with US software, maybe.
And you saw it in the SPY, Matt. I know it's one of those things where all of a sudden it's just like, darn. Okay. Anyway, thank you.
No. That was. I appreciate that. I wanted to. Bonds are still looking great.
Yeah, bonds were holding up well, but
as long as I'll tell you this, as long as bonds. Hold on a second. See something here. As long as bonds are holding up, and small caps and tech is moving in the right direction overall over the course of a week, I feel very comfortable with this market.
Yeah.
I'm not seeing any. I'm not seeing anything. I'm not seeing anything nefarious here, guys. And I'll be the first guy to tell you. Well, Clyde and Harry will be the first.
They'll
They'll
be the
tell
first
us.
ones. They're
They'll tell
tuned
us.
in.
You
But
guys like those pictures I've been posting? They've been
oh my
hilarious.
God. But you know what, Roger? It does remind me of something that you shared with us, and I think Kane has said the same thing. When you look at all the algorithmic traders, the bots that are out there, they focus on keywords and things of that nature, and they hear things like China tariff more, you know, and
Yeah,
all of a sudden,
algos running
algos
wild.
just goes nuts. Yeah.
Remember, folks, algos are AI driven, and AIs are really smart, but they're not. You know what I'm saying? They're really, really smart in certain ways, but they're dumb in other ways, and they don't have a good memory. So what happens is, so what happens is, algos hear what Raleigh just said. I mean, it's exactly what they hear three words like that: China, Trump, tariffs, boom, and they go on a rampage. And that's one of the biggest reasons why I don't use physical stops. Physical stops, you get an algo move, boom, you get stopped out, and then it comes right back in.
Comes
And
right back
sometimes
in. Yeah.
you'll hear news for 3-5 days after the fact, and they'll just keep doing it another just to screw with you guys, just to screw with you. They'll do it all the time. Okay. By the way, did any of our small caps hit? I didn't hear anything from
Did
anybody.
not, Roger. Not
Okay.
even close. Not
Okay,
even
cool.
close. Yep.
That's what we want to see. Remember, it's not whether they hit; it's whether they hit and make money. If I give you 50 stocks and 3 stocks hit, and all of those 3 stocks make money, then I'm doing my job. If they all hit and none of them make you money, then yeah, not hitting is that's the way it's supposed to be. You know.
Yeah.
Okay.
And so far, just the tail of the tape, Roger, we've had 15 small caps. 2 of them have hit, and both of them were winners.
That's what I want to see. Perfect. Okay.
Real quick before you move on,
Yes.
Gaetano, he made a comment or a question. I thought it was a pretty good one. Yes, didn't Jesse Livermore basically leverage himself and outperform the market? So you got to understand, Jesse Livermore was not a fund, and more importantly, he wasn't an open-ended fund, and more importantly, he wasn't an ETF. So if your ETF is going down, you're going to have a lot of people who freak out and bail out. So even if everything bounces, you're not bouncing up with the same amount of capital that you had before. So you're basically being forced to take a whole bunch of losses along the way. And then, so when an index versus the IWM, which is perfectly tracks the index, if the index recovers, it doesn't have those drawdown issues. So what Roger was looking at is the actual drawdowns, meaning that money is actually leaving and the value of that fund is actually going down, versus an index that, the price moves down and it moves up. So because of that money leaving, you don't have the same capital chasing on the way back up, and it makes it a lot harder for you to recover.
And that is exactly right.
I got to say this. We've got some smart people in this room, folks.
Kane was taught by Peter Navarro and Bill Gross.
I mean, seriously, Kane, that was unbelievable analysis.
That's why we keep guys like that around. That's why we keep guys like Matt, Kane, Clyde, Harry, I'm just messing around.
Yeah.
No, he's oh, by the way, I was going to ask you, Kane, do you know what's priced into the bonds? I always ask you because I know you know. What's priced into the bonds for December? I know that November is like 100%, but do you know where the December stands in terms of whether they're going to take action or not?
It's pretty close to 100%.
Is it also 100? Okay.
Yeah.
I don't know.
It's really
I'm still a little bit on the fence about December.
So am I. I'm skeptical. It's at 96.3%. It's
wow,
ridiculous.
Well,
yeah.
And I mean, look at the bond market. I mean, look at this thing. I mean, sure, it's telling us the same thing. Okay, so let's start with the shorts and let's take a look. Okay, so I like the stock. It's not overextended. The only problem is we have the 100-day moving average here, and we may just bottom out here. So I would rather wait for Reddit to get below the 100-day. But if it does, it's going to be the target will be right here, the 200. But I would wait till it gets right here to this area. So I'm not going to give you options on this. I'm just going to wait. IONQ. Nice. With a target of the 100-day moving average. This is kind of what I'm talking. This is exactly what I want to see on Reddit before I give you a signal. So here's Reddit. It was a coincidence. I didn't intend for that to happen, but you could see it right here. See how it's in line here, how it's still in the compression. We want it to break down of the compression and be below this level right here. And you could see that on IO and Q. And it's not the 100, it's the 50, but you could see how it's breaking the 50. We want it to look like that. I would be looking at puts. I would go about 30 days out. I would do a spread because I can already see the options are going to be pretty pricey here. So I would just go ahead and buy the 56 and I would sell the 55s. Buy the 56, sell the 55s. These options are not priced correctly right now. These should be closer to $8. Point is, you should pay no more than 50 cents for this. If you want to go real wild and crazy, you could buy the 66 and sell the 64. Buy the 66, sell the 64, and you could do that for $1. Pay $1, and then your profit is $2. Okay. Keep in mind, earnings are on the 5th of November here. In regards to Kathy Woods, honestly, I don't know. I've heard her speak before, and I just don't see her as being I think she was an analyst before. And I looked at her background and see, the problem is it's one thing to analyze stocks and it's another thing to trade stocks. I know a lot of analysts who've never traded before. That's a problem. Okay, RHI, clothing companies are not doing well right now. Earnings are, I guess, after the market today, so we may look for a time spread on this. We may look for a time spread on that. We'll see. We'll see. By the way, we just closed the time spread. Last night, this morning, it made money, and we closed a strangle on MO in the pit that made money. So we did close 2 trades. We have a coin trade, a bonus trade that's going against us. Donald Trump. Folks, don't get political on me. I'm just reading charts. Okay. It's breaking down. Earnings, we don't have earnings here. And again, folks, don't trade something because I love Netflix as a service. Okay. I love Netflix. I'm never going to get rid of Netflix. But in terms of their company, I think they're making huge mistakes. You see how I could like something and still be critical of them? You got to learn to do that. You got to learn to be honest with yourselves. Separate the financial from your personal pleasures. Okay. There's a big difference. Hal says, I thought you said a while back in a webinar that she was a pretty decent analyst. Yeah. I mean, she seems to be a good analyst, but she's not a trader, but you can't be I mean, they're 2 different things. Being a trader and being an institutional trader are another two different things. Look at Kane's face. It's not the same.
Completely different.
I know I'm interrupting myself, but if you ever read Kramer's biography, okay, if you ever read autobiography, it's actually pretty honest, and he's pretty hard on himself. This was like I read it like 20 years, at least 20 years ago, and he says in the book that he got into trading. He became a stock picker. He was sleeping in his car. He was doing some kind of a newsletter. A rich friend discovered him. And great. But what he also says in the book is when he started managing money, which his wife got him into the job, she was a desk trader, an institutional desk trader. And he says in the book, I was lost when I started managing institutional money. My wife showed me exactly how to do it. It's in the book. It's in his book. I'm not making this up. Read his autobiography. They're divorced now, but he was saying really good things about his wife and how she basically got him to be a successful institutional trader. So it's very different trading, institutionally trading, and analyzing stocks. It's all that stuff we talked about with your. You don't have to worry about state of mind, and state of mind is 60%. Okay, puts. Let's go 30 days out. Or the Trump right here. They're not expensive. 17 puts right here. Boy, I'm very chatty today. Texas Instrument. All right, nice breakdown right here. Okay, there's one thing I'm going to teach you this right now, and I wanted to talk about this. So instead of making it a separate topic, I'm just going to teach you this topic right now because this is a really good example. Okay, so this stock is breaking down, and you could see that it's deviated from the 8-day EMA. Now, I'm giving you a short example. Everything I'm talking about applies to the upside. So if the stock was right here, I would be saying exactly the same thing. And oftentimes you hear me say, don't buy stocks. Don't buy stocks that are overextended to the upside or the downside. There's an exception to that rule. If you are day trading, and I mean strictly day trading, it is okay, actually advised to trade stocks that are at the edge of being overextended, because usually that's when they give you the most play. Like this stock right now, except for the fact that it's at the VWAP. But if you're swing trading this stock, you want this to be a lot closer to this. But if you're day trading, this is okay. This is okay. So remember, when I look for stocks, I turn all of my day trades into swing trades. So I tend to be less prone to take these kind of trades because if I get stuck, I'm just going to hold the trade as a swing. And I wouldn't feel comfortable holding this as a swing. I don't think I would because it's a little overextended. I still may feel okay, but a little further I wouldn't. But if you're just day trading, these stocks really give you these stocks are moving. So it's okay to beat them. So just wanted to make a distinction between day trading and swing trading overextended stocks. Okay. And if this was completely beyond this area, like this area was right here, then I would say just forget about it. But if you're on like the fringe, which is a lot of the stocks we look at are like right at the edge, they're still okay for day trades. Okay. Just wanted to tell you that. I would do a debit spread here because we're coming off of earnings and implied volatility is still high. I would go about 23 days out. I would go about 170. I'd buy the 170. I'd sell the 165. I would try to do this for about a 250. 250. Okay. All right. Are you in a position, Matt?
No.
You've done enough today. Done enough damage, right?
Well, I'm nervous about the response to the tariff news because when it happens over lunch, I don't feel like we digest it enough.
Yeah, it happens all the time.
So I want to see what happens after 1:00.
Yep, I hear you. All right, let me show you stocks to the upside. Keep earnings in mind. TPR. I like TPR. It has to trade. If you want to trade this today, it's got to trade above the VWAP or no soup. I know Richard loves this stock. Richard, you never got in, right? You were waiting for it to get above the VWAP, I think. I'd go about 30 days out right here, 116 call and sell the 117 or maybe the 118 call. If you do the 117, you want to pay no more than 50 cents. And if you do the 118 versus the 116, you want to pay no more than $1. Okay. That's perfect. Weak guidance, Christopher. We're on a short side. That's music to our ears. It's exactly what we want to see. Okay, let's continue. MCK. I know. It's a $700. Roger, why are you giving us $800 stocks? Just because you work for the Bronfmans doesn't mean we have Bronfman money, okay? I mean, who's going to afford these? Well, I got a solution for you. You can go about 30 days out. You can buy the 790 or 795 call and sell the 800 call, and you could do this for $5. $5. Here, if you do the 790 versus 795, you could do this for $2.50 or less. That's not bad. Don't have to pay $793. You can only pay $2.50. Okay. Michael says, are there links somewhere where you go over? Yeah, they're in that streaming in the YouTube in the stream tab. Yeah, Michael, send me an email, roger@rogerscott.com, or look at the stream on YouTube. But I love this trend. This stock looks really nice. Kane, do you agree? Nice looking stock, right?
That's great. Yeah.
Yeah,
And it's in
real.
healthcare, which is heating up right now.
Speaking of healthcare, let me see how AbbVie's doing. Yeah, just sitting there. I need the stock to go up to about right here. I'm being patient with it. All right, let's continue. AMD. AMD, we need to go above the VWAP. We need to go above the VWAP if you want to day trade this stock. Otherwise, don't do anything to it. You want to go about 30 days out. You want to go and do a debit spread. You want to buy the 232.50 and you want to sell the 235 and you want to spend no more than $1.25. Why $1.25? Because that's the difference, because the spread is 250. What's 250 divided in half? $1.25. You never want to pay more than 50% of the spread. How often do I demonstrate this for you? I've been doing it every day here for the last month. All you got to do is come to this session. HCA, another healthcare stock. Now, here's a perfect example. I would still take this as a swing trade, but if this was up here, another day higher, I would only take it for a day trade. That's actually a really good example. Right here. Right there. So let's just take a look. 30 days out, only monthly options. These are expensive. We would do a spread. We'd go to a 0.50 delta, 440 versus 445. The spread is $5, right? That means we spend how much? No more than $2.50. Pan W, let's take a look at Pan W. Looks great. Looks like a perfect A-line still. Look, it's bouncing off the 8-day. Just need to wait for it to get positive and to trade above the A-line. But this is great. I like it. No problem there. Okay. Still looks very good. Who is it that asked me? Dr. Luke. Yeah, still looks good. I would just wait for it to break. I would wait for it to finish doing what it's doing right now to trade above the VWAP and for it to turn positive on the day. But I like it. I like it. I like it. I like it a lot, actually. Let's continue. MNST, flight to quality. Look how it's keying off the 15-day. Very nice. What kind of a pattern is this, folks? Can anybody tell me what kind of a pattern this is? Exactly, Kate, an A-line. Very good. Sean, you've been with me for over 2 years, and you don't know an A-line yet. All right. It's an A-line. It's a classic A-line. Thank you guys for getting it right. All right. You could just buy the 6750 call for 430, 450, something like that. But you don't need to do anything. If stocks start going down, you will see upside in these stocks. Also, wait for it to trade above the VWAP if you're doing it today. Dr. Luke joined a week ago. You already learned the A-line. There you go. That's what I'm talking about. That's the spirit. Rostor. Rostor is looking good. Really good, actually. Matt, add that to your list. Look how it bottomed out, and then look how it tried to go right below the VWAP. It did it for like 4 bars, and now it's back above. I like Rostor. I'm going to add this to my list. If we get out of our... Let's see what Microsoft is doing. Microsoft's doing nothing. If we get out of Microsoft, maybe I'll go long Rostor. Okay, I got one more for you guys. FTS. Not overextended. Nice running stock. Nice, not a bad look. I don't think I day trade this because it's not running away with the circus. And volume is a little low, but it may be a good swing. Something to keep an eye on. It's very spready. It's very, very spready. All right. Now, I just gave you guys some really, really good red meat. Like really, really good red meat. And tomorrow we're going to continue. I didn't have a chance today to talk about implied volatility, but I will be talking about it tomorrow. Now, what Kane and I are going to do, Kane did not come here for his health.
Yes, he did.
I did. I came in to get the Roger diagnosis.
Well, there you go.
Get a
That's
Roger
always...
infusion. Yes.
I love it. Let me go and share my screen real quick, and I'll By the way, Kane, you've been flying around the world lately. Where did you go, and are you back? Like, can you give us just some basic idea about your travels for the last? I'm curious. I'm just want to know you. You don't have to
I
get
have been
detailed about
going
what you
around
were
a lot.
doing. Just
Yeah.
where were you going? That was what I was curious.
I was back in Zurich, so there's a fund out there that just wanted some consulting, and so
Gotcha.
I went out there, and then I'm going to actually going to Chicago next week also. So a similar thing, visit some people who are in Chicago. There's a lot of funds out there, and just do a little bit of consulting.
Excellent. That's excellent. Are these stock or bond funds?
Well, the Zurich one was actually a crypto fund, and
Ooh, interesting.
the Chicago guys are stocks. Yeah.
Huh? Chicago and stocks. Usually, when I hear Chicago, I hear commodities.
Commodity, yeah, right, yeah.
Yeah, that's what we think.
Yeah.
Commodities.
Yeah.
Yeah. First thing I think about is commodities. Put my fan on. Oh, that's the problem. It's not going towards me. It's going towards Matt. Okay, folks. Let me just fix this a little bit. Folks, we're about to do a class. Please, please, please pay attention. Please, please,